Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to be doing our stock market weekly recap for April 26th through the 30th of 2021. This will be week 17's recap. We're going to go ahead and take a look at the most anticipated earnings that were released this week. We're going to take a look at Tesla, 3M, AMD, Microsoft, Google, Facebook, Apple, Amazon. We'll take a look at some of the big stocks and check out their performance for their earnings, their revenue, where they're at financially over the past, say, 3 to 5 years. And then after that point, we're going to go ahead and jump over, taking a look at the entire S&P 500 performance, Dow Jones, NASDAQ, Russell 2000 performance for this past week. We'll also take a look at crypto, where it's currently at here on Saturday as this video is being recorded. We'll take a look at the overall market, what stocks were up, what stocks were down, what sectors were strong, and what sectors were weak in the S&P 500. Then we'll take a look at oil, dollar, silver, gold, bonds, the 10-year yield, and current mortgage rates. I like to do these on a week-by-week basis just to kind of keep track of where we are at in the market right now, what's going on. Right now, we're pretty high as far as market overall, return has gone and stock market highs. So a lot of investors are kind of anticipating some sort of a pullback, or maybe we'll trend sideways for a while, kind of building up some momentum before we either break to the upside or break to the downside. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. Now, at the beginning of this video, I really want to go ahead and start covering some of the earnings that, some of the most anticipated earnings of last week, starting with Tesla. So I went ahead and went over to Earnings Whisper, and this is actually released here on the first quarter of March 2021. Earnings of 73 cents per share on revenues of 10.4 billion. So this was here recently, and it was released here on Monday, April 26th, at a little after hours. So at 4:05 p.m., after the market had closed, it went ahead and released their results. So reported earnings were 73 cents per share, where their actual estimate was at 78 cents per share. So they were off by 5 cents. That's a difference there of 15.1%. So they're still working on their year-over-year growth for their earnings, so that's for year-over-year is blank at the moment. As far as their revenue goes, they reported $10.39 billion of revenue, whereas they had estimated at $10.24 billion, which was an increase there of 1.5. And just overall year-over-year growth for their revenue is up 73.6%. So I did see a bunch of other channels covering Tesla. I believe Meet Kevin was actually live during the event, listening to the Tesla results. I'm not sure if Jeremy over the Financial Education channel had also been, watching these, but those are two of the big channels out there who really follow along and are pretty heavily invested in Tesla. Now, 3M beat earnings here. This is kind of an interesting one. This is one of my holdings here. So they came out recently also on Tuesday, April 27th. And they released their earnings per share of $2.77 per share with revenues of $8.9 billion. So they had only been expected around $2.25. So that's an over 50-cent difference there, and their expected revenue was at $8.5 billion. So they beat their revenue and their earnings by, gigantic numbers. So here they reported 2.77 versus their estimate of 2.25. So that was a huge beat there of 16.9% on their earnings per share for the quarter. Reported revenue of 8.85 billion versus 8.47 billion. So that's a very nice increase there of beating by 4.5%. And as far as their revenue growth year over year, it is up 9.6%. So the great thing about Earnings Whisper is you can always go into more detail here down towards the bottom long term. Waste Management, this has also released some earnings here on Tuesday. This is in the morning, so pre-market, they released their earnings. Waste Management came in for the first quarter of 2021 at $1.06 per share on revenues of $4.1 billion. This estimate was at $1, so they beat out their estimate by $1 per share, and they had an estimated revenue of $4 billion. So they beat on their earnings, they beat on their revenue. So they only beat by a tad, but that's still enough right there. So they reported earnings of 1.06. So this is going off their earnings whisper. So earnings whisper calculates what their estimated earnings is at. They had estimated at 106. So they came in exactly on the dot. But we can see that the consensus estimate was at $1. So they actually beat it out by what, 0.6% there, I believe. So they actually did really well there for their earnings per share, and reported revenue of 4.11 versus estimated of 4.02 billion, and they beat that by 2.3. And they're saying year-over-year growth. So, whatever happened here in 2020, and it's a very hard niche to get into. So they're reporting really good earnings, they're reporting really good revenue, and this is just a consistent business model. Then we have AMD, ticker symbol AMD, Advanced Micro Devices. So they beat on their earnings. They had first quarter earnings of 53 cents per share and 3.4 billion, whereas they had estimates of 44 cents there. So they beat that out by nearly 10 cents. So coming in at 9 cents beat. They had revenue estimates of 3.2 billion. So they beat that out by about $2 million for their revenue. So that's really nice and exciting. So earnings whisper had them at 0.47, which is still higher than their estimate of 0.44. And they beat their earnings whisper here by 12.8%. So really nice results there for AMD. I remember when AMD just a couple of years ago was trading for under $10 a share. And now AMD right now, it is trading. So let's go ahead, and I have it all pulled up here. But AMD is now trading at $81.62. So that is amazing in itself. So they have gigantic, they've leaped up a giant amount here. So down here at the bottom, they were worth quite a bit. And their price. So if we go back, let's go back 5 years. We can see here, their purple line is their price, and we can see here that they are trading down for quite a while. Back in 2018, right around that $10, $15 mark for quite a while. So really interesting there with AMD. And then we have Microsoft reported earnings on Tuesday, April 27th. They came in and they beat their expectations. So they came in at $1.95 per share on 41.7 billion. So they beat out their estimate by around 20 cents there. So they had an estimate of $1.76, came in at $1.95. So that's 19 cents difference there. And revenue of 41 billion versus they actually came in at 41.7 billion. So really nice beat there. They beat out their earnings estimates by over 4.8%. Earnings whisper had them at 1.86. That nearly beat them out by what? A little bit right there, 11 cents. So that was a 4.8% difference, but they had even a bigger difference between the consensus, which that's what? Almost 9% difference there. Reported revenue beat out by 1.6%, and they have revenue growth of 19.1%. Microsoft is one of those companies that we use their products every day. Right now, here I am using one of their products. I'm on a Windows operating system. I have, at work, just about every business out there uses Windows. They use Office. They use maybe Teams and so many other products. So they're continuing to create, design, manufacture, and create different products that compete in different industries and areas. So really interesting business that, Microsoft has always been one that I've been kind of wanting to buy, but just have never bought into it. Now, jumping over into ticker symbol GOOG. This is Google or Alphabet. And they beat expectations here. They came out at $26.29. That is huge for the quarter. $26.29 per share of revenue on $55.3 billion. So their estimate was $15.66. That is a huge beat there. That's over a $10 difference in earnings. So all these other companies are coming in here at $1.95, 53 cents. Waste Management is $1.06, and here Google is with a $10 difference in their estimate. So just gigantic. So they came in with revenues of $51.3 billion, and their earnings whisper was even a little bit higher of 15 at 17.39, but they beat that out even almost nearly $10 there. And revenue grew 34.4%. So just more people are out there watching, using YouTube, watching those ads. That, Google main business model is all about online advertising. So back in 2020, here in 2021, YouTube is just such a main driver of education, on creating content that's entertaining, fun, and people sit here and they watch YouTube videos. I watch YouTube videos on my computer. I watch YouTube videos when I'm working on something or out in the garage doing some sort of fun stuff. I just kind of watch a video, and I can't always skip the video, so they get me on those ads, and that's their way of making money, and they do a really good job of it. So Visa, they beat out their expectations. They came in at $1.38 per share, revenue of $5.7 billion. They expected at $1.26. So that's a beat there of a little over 10 cents. Revenue at $5.6 billion. So they beat that out by a little over there. $0.1 billion there. So really good. Visa, of course, I think everyone can look into their wallets and have some sort of a Visa credit card. I have multiple credit cards from Visa. I just opened up another credit card just recently last week for my YouTube business, actually. So I opened one up for a line of credit, and that's always nice to have. And so reported earnings at 138, estimated of 126. So they beat out Earnings Whisper's earnings of 3.8%, and that was only slightly higher. So their actual beat out was probably about 4.5% for earnings, and revenue reported at 4.73 versus 5.73 versus 5.55. That's a beat by 3.2%. But you can see that their revenue growth year over year is actually down by 2.1%. So kind of interesting there for a Visa. And we have Starbucks. They beat out 62 cents per share and 6.7 billion. They had expected 0.52, so that's a 10 cents difference. And revenue of 6.8 billion was their estimate. So they beat out on earnings but missed slightly on their revenue. So here we can see that their revenue is off by 1.7 billion, but really a 1.7%. But really that's not a huge difference in that. So long as they're growing with their earnings, that's good for the business. And year over year growth is still really good there for the revenue, up 11.2%. We have Apple beat out earnings 140 per share on revenues of 89.6 billion versus $1. So they beat out their earnings by 40 cents there, and their revenue by nearly $10 billion there. Their earnings came in 29.6% over, revenue came in at 16.3% over, and revenue growth for Apple is up 53.6%. They're just a cash machine right now. We have Facebook as well. I'll go ahead and let you guys go through here. I think we're taking a bit too long. I didn't think that these would take so long when kind of covering them, but I really wanted to cover some of these big FANG companies because, I really like to see where is the market heading. These FANG stocks make up 33% of the S&P 500, or tech companies make up 33% of the S&P 500. And these tech companies, these big FANG stocks, make up probably 25% of the 33% of the technology stocks. So AbbVie here on Friday, they missed on their earnings. They beat out their revenue, but they kind of missed out. Oh no. This is showing that they missed by 0.7, so AbbVie misses in their mind. So this is based off Earnings Whisper. So they reported 295. Earnings Whisper had them at 297, but the consensus was 285. So yes, they did beat out their earnings per share on their estimates of 285. They came in at 295, so they beat out their estimates by 10 cents. They came in at $13 billion of revenue versus 12.8. So they beat. These are just kind of skewed because of Earnings Whisper. Earnings growth year over year up 21.9%. Revenue up 50.9%. Okay, let's go ahead and cover the stock market recap of the week now. Let's go ahead and start with the S&P 500 index. This is up 0.02% on the week. So not a whole lot of growth here on the week. Up year to date 11.32%. The Dow Jones lost 0.5%, or about 0.5% there. Still year to date up 10.68. So the S&P 500 beat out, I believe last week, the S&P 500 actually surpassed the Dow Jones So the Dow Jones had been actually outperforming the S&P, but with this pullback here of 0.58% and the S&P 500 basically staying flat this week, the Dow Jones pulled back and let the S&P 500 pass them up for first place right now. No, second place. The Nasdaq is in third place, up 8.34%. Not as big of a pullback as the Dow Jones, but this is back 0.39%. And we have the Russell 2000 in first place year to date, up 14.77%. Pulled back about half of what the Dow Jones pulled back at 0.24%. So right now we have the Russell 2000 in first place, followed right behind by the S&P 500, followed by the Dow Jones in third place, and the Nasdaq trailing right behind at 8.34%. Now, taking a look at crypto is one of those markets that you can buy and sell at any time. The other day, I was talking with my friend. Bitcoin was at $52,000. And I actually want to buy, I on Coinbase, I haven't actually ever bought any coins, anything on Coinbase. So when you log on to Coinbase, if you've never bought anything on the platform, you can buy $1,000 and they'll waive the fee. So I'm considering buying $1,000 of cryptocurrency. Maybe Bitcoin or something else. I have a couple coins in there. I took the little free. So when you sign up for Coinbase, I have a link down in the description. They give you $5 in Bitcoin. Then once you're on the platform, you can take a couple, like learning about different cryptos. I think you can learn about Stellar Lumen. You can learn about a couple different ones and like what they do, what their process is behind the cryptocurrency. And they actually pay you out in that currency. So by the end of watching the videos, taking the little quizzes, you end up with about $20 some of cryptocurrency, which you can then sell and convert over to Bitcoin, or you can just leave it as it was given to you and just have it inside of your Coinbase account. So right off the bat, if you sign up for Coinbase down on the link below, you get $5, and you also get roughly $10 to $15 of other coins. So giving you about $20 there in crypto for free. Thought that was pretty interesting. So cryptocurrency, Bitcoin's at 57,759, Ethereum at 2,930, Ethereum 2 basically at that same price, XRP $1.59, Tether $1, Dogecoin 37 cents. So it's still bouncing around there. I see investors buying it back in the 20-cent range. I know in Facebook groups they're still pushing it. Buy in the 20-cent range. It's still got more room to grow. So Cardano at 134, and a few others, Litecoin 272.72, and a few others that I'm not too familiar with. So I usually like to report at least on Bitcoin, Ethereum, and a few of the other ones there. So that is your cryptocurrency there. The S&P 500 performance for the past 1 week. We can quickly see here, what is green. Right off the bat, I can see that the greenest sector is energy. We can see Exxon up 3%. They reported earnings on Friday. So Exxon and Chevron, both pretty positive. So let's go ahead and just quickly take a look at XOM. And we'll also take a look at CVX. So they both, Chevron missed. This is, okay, yeah, this says that they missed, but if you go down here towards the bottom, they reported 65 cents per share. The consensus was 59 versus earnings at 70. So Earnings Whisper has them missing, but in reality, they actually beat out by 6 cents there for their earnings per share, and they beat out their revenue by 8.7%. That's still really good growth there year over year. Earnings per share up 22.6%, revenue up 5.3%. And Chevron here, they reported 90 cents per share on consensus of 0.92. So they did miss there slightly by 2 cents. No biggie. We can see that their earnings growth is down still year over year by 30.2%. So Chevron, even though they reported bad earnings, we saw the tech stocks report. So Apple, Facebook, Google, Amazon, they reported, and they're up really nicely for the week. Facebook nearly 8% there. Even though they missed, Chevron missed on their earnings per share, you can see that's still positive for the week there by 1.5%. Exxon up 3%. But Apple reported really good earnings, down by 2.13. Microsoft reported really good earnings, down by 3.44. So Tesla also on Monday, down 2.74 on the week. Starbucks reported they beat out. They're down for the week by 2.61. So really, earnings can go either way. Earnings have no really, whether you beat earnings or miss earnings, you can be affected positively or negatively in the market. That's just the way it is. Now, it looks like healthcare has taken a break. For the past 2 weeks now, healthcare has been one of the best sectors to be invested in. But here this week, we can see Merck taking a break down 4.34. We can see Eli Lilly down 3.15, and a few others down as well. Financial credits and services, we can see Visa up 1.55 on the week. Financial is doing pretty positive there. JP Morgan 2.41, Bank of America 3.45, Wells Fargo 2.71. So I would say, taking a look at the map, I think that energy did really well this week, probably the best sector overall. We can also see UPS and FedEx. They reported earnings this week early on. So UPS reported earnings on, was it Tuesday? Yeah, Tuesday before the market opened. And we can see that they popped up really nicely for the week. We can see they're up 13.91% there. Doing really well there. FedEx also right behind, up 4.53%. So banks did really well this week. As far as the regional banks, they're pretty positive. Capital markets, pretty positive. Some of the FANG stocks did pretty well on their earnings. Netflix recovering a little bit after their loss last week. And at oil, energy probably the best up overall. Okay, let's go ahead and jump over to oil. So we can see Chevron, Exxon did well. The oil fund here, USO, up 1.91 on the week. So pretty positive there. We can see that dollar not moving so much higher. It did move higher out of that $90 range. So it started the week here at $90.86, up at $91.30 now. We can see silver down for the week by 0.56. So gold and silver were down this week. They're not having a good time right now. Silver down 0.56. Gold not down as much. They're down 0.44 on the week, but they're still down the most year to date, down 7.11%. Bonds down 3.32 overall for the year, down for the week by 0.22% there. So bond market not doing so hot either. Now, I did find a new page for the U.S. Treasury note. For whatever reason, the other one wasn't updating since March. So we can see that the Treasury note right now is at 1.62, but Fed came out saying that they're going to be continue to buy up bonds. They're going to try and continue to keep rates suppressed low, but I don't know for how much longer. We may see as we get closer to the end of 2021 that the Fed begins to kind of slow down and let yields rise. And then finally, we have mortgage rates dropping 1 basis point to 3.21% from 1 week ago at 3.22. So not a big change on mortgage rates. Anything right now, you'll probably get a range of anywhere from 3 to 3.25. Really just depends on your credit. So that is basically all we posted. I did buy some Clorox this past week. I bought a little bit of Clorox and also kind of discussed Tesla, how it makes its money. I thought that was a really interesting one. I had a discussion with a friend kind of asking me, hey, why don't you buy Tesla? Tesla's such an innovative company. It's not just automotive vehicles. So I kind of posted this, that they're still making, 85% of their revenue comes from automotive. I broke it down here in my post. So yeah, 85% comes from automotive sales, 5% from services and other, 5% from energy generation and storage, 5% from regulatory credits. So I'm not sure how long those regulatory credits will remain. So once those drop off, I'm not sure when they will actually drop off, if they will, but that'll be 5% of their revenue right there drop off along with it. Automotive sales, I think that'll still continue to be a big factor of their business in the future. Maybe if they can buy old Tesla cars and start having some sort of a used selection I think their new cars are pretty inexpensive overall for an electric car in the $30,000 range, like the base Model 3. So I still think that has a really good push to get people interested. And plus, I don't know how long their coverage is for service. Usually it's 2 to 5 years. So I think their services, as more Teslas hit the roads, and that initial service warranty or whatever expires, and customers are coming in to get their vehicle serviced and they'll have to pay, I think their services and other will bump up to say 10-15% as these other ones kind of roll out. And of course their energy, that'll kind of continue to grow steady as well. So that is going to be it for this video. Let me know down in the comment section below, what were you watching this week? Did the market perform as you would expect, basically staying flat? I don't know where the market will go here in the future. I'm really looking forward to a bit of a correction, a pullback, and I would like to invest quite a bit more versus where I have been investing at the moment. But overall, that is going to be it for this video. Let me know down in the comment section below if you're planning on buying anything this coming week, or if you're planning on selling and kind of watching the market. But that is it. Thank you all for tuning into this video. If you guys have any comments or questions, drop them down in the comment section below. Remember to go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye bye. Thank you all for watching. Bye.